Good afternoon, girls. Today in our class, we are going to see international capital markets. About international capital markets, which you have as your unit 4 in IFM. We are going to see that today. And our syllabus have been based upon the book International Financial Management by Varshney and Bashir. So my entire class teaching today is going to be based upon the material given in that book in Varshney Bashir. If you have the book copy in your hand, you can also take that in hand and you can follow me. So in international capital, we all know what is a capital market. So capital market is nothing but where the savers, money, the persons who are able to save money can transfer their funds to the borrowers in exchange of a promise to get more money. So the persons who have saved money, they invest money in an expectation that they will get more money. So such a market is called as the capital market. And when you go the same as international capital market, it is nothing but where we have international borrowers as well as international savers, or the money of the savers are in demand by international borrowers, where foreigners can also borrow money and the foreigners can also lend money. Such a case we call that as the international capital markets. So now all capital market has become international because we have no borders or limits for need of money, for lending money as well as for borrowing money. But a capital market to become an international capital market, there are some two conditions are to be followed. What are the two conditions that should have taken place for a capital market to become an international capital market is, first is the local regulations or the local country should permit such international transactions. The local market, capital market or the government or whatever it be, it must, the local situations must, the local regulation or the regulation by the local government should permit such an international money transaction for lending and for borrowing. Number one. The second one is there should be potential users who are attracted to it. See, though the government has allowed us to borrow money, only if you have lenders from foreign countries, then only you can borrow money from abroad. When we don't have persons who can lend from foreign countries, then we cannot call that as international capital market. So one is there should be the local regulations should permit it. The second is we should have potential users, potential borrowers as well as our potential users. So when these two conditions are satisfied, any capital market for instance, it becomes an international capital market. We all know about currency markets also, isn't it? So currency markets of the world, you know, all the currency markets of the world, every currency has its own market in the international currency market. So it has become global. All the currency market has become global. Not only currency, but all the products have become global markets, and currency especially is always a global market. So when currency becomes global market, there has been a need for global finance also. So global finance has helped global production. So to make the production global, not only to make the production global, for other particulars, for other purpose also, we need finance globally, and this makes capital markets to become an international capital market. Not only that, the tremendous increase in the international banking and finance has also taken place. All these things contributing to the growth in the international capital market. So no domestic economies are stagnant nowadays. They are not limited with their own country, but all the countries have improved themselves or tremendously grown themselves to become international economies or international capital market. So India, our country India, has also transformed itself to use international fund, international finance, and now we also have international capital markets. Not only international capital markets, we also use external commercial borrowings as one of the source of external finance. We also use external finance. So India is also not back, we are also up to the mark. And talking about this international capital market, we have to know about the international scope of the international capital market. We should know about the all international financial operations. What are the financial operations that take place in the international capital market. So let us list them. You have that in your material. You can also follow that. When you list that, the first is the exchange deals. Exchange deals is nothing but the buying and selling of currencies. So there is a transaction on buying and selling of currencies of the world, all over the world. That is, as we saw earlier, it is the international currency market. So that is one of the major international financial operations. The second, we have banking transactions, accepting deposits and lending to corporate bodies. We know that is the major function of a commercial bank. But now this activity of accepting deposits and lending loans has been grown in an international level, and hence one bank of one country lends loan to another person of another country, and likewise a person from one country can make a deposit in other country's bank. So banking also has grown to become international financial operations. Then we have capital market operations. We know what is that? Issue of shares, debentures, etc. So a share or debenture issued by a company from one particular country can be bought or invested by any person from any country. So capital market operations, that is buying and selling of securities, either using trading, all these things have become international. So this is also a major part of the international financial operations. Then we have handling fund flows on account of trade between countries, exports, imports. So we have to pay for our imports and we have to receive money for our exports. So there is a fund flow among the countries who are involved in this trade, export and import. Not only export and import of goods, we also have payment for certain services like not only banking and other, we have some certain airlines. For example, Indian Airlines, they gain money not only from Indian people but also from other people who use the services. So all these amounts to international financial operations, and not only those services, but we can also take our financial services like merchant banking, which is done all over the world. So one particular country, credit rating agencies, all these agencies, they function in an international level and they have customers over the globe, and we are able to receive money or financial operations undergo also through them. So these are the major financial operations which we have, and all these things come together under the head international capital market or a demand for international fund. So before that, we should know about how to get foreign exchange finance or external currencies of foreign countries. How do we get that? What are the sources for getting that finance or international finance? We can say that, call for that international finance. The source of finance is broadly classified under two categories. One is called as the official and the second is the private channel. So it can be an official channel or it can be a private channel. And coming under this official channel, we have bilateral funding agreements. That is transaction between two governments of two countries. They have transactions. One government gives money to the other government and the other government gives money to this country. So the agreements between governments of two countries, they come under the official channel. Not only the transaction between the governments but also the transactions between the multilateral financial institutions like the ASEAN, all these Asian Development Bank. So like international banks, World Bank, etc., all these things, they have some multilateral, that is two or more countries, they join together in a forum and they have transactions, monetary transactions. So all these things contribute to the official channel of or official source of external finance. The private channel, what do we mean by the private channel? That is, this private channel comprises of all the commercial activities that have taken place among the countries. So all the commercial activities that are taken place among the countries attribute to the we can also call this private channel as the commercial channel or commercial source of this. In this commercial source, we have two things. One is the commercial debt market and the second is the commercial equity channel. So we have commercial equity channel and commercial debt market. In this commercial debt market, we have euro currency market, the national financial markets, buyer credit or as well as supplier credit, buyer or supplier credit, all these things comes under the commercial debt market. So here everything is going on loan based. And we also have this commercial equity market which consists of this euro equity, offshore fund, portfolio investments, foreign direct investments, all these things comes under the equity side. So taking this commercial source, we have this debt part and the equity part, the loan part and the equity part. So whatever we get as loan or debt, that borrowings comes under the debt market, commercial debt market, and whatever comes in the part of foreign direct investment or portfolio investments or offshore fund or equity, buying of equity, making investment in the equity of other countries, all these comes under the euro equity investments, or we call that as the equity component of the commercial market. So coming to this debt market, this euro market, we call that as, instead of international financial operations, we also can call that as the euro transactions. So euro transaction is nothing but international transaction. We mean that as a euro transaction. Euro currency, we have euro currency markets and we have euro bond markets. We have both of them. We have both. So euro currency markets, to talk about, they are offshore markets. That is having transactions apart from our countries. That is what we call as the offshore market, where financial institutions, they conduct transactions which are denominated in currencies other than the domestic currency. So whatever transactions, financial transaction we have which is not denominated in our country's currency, that we call as the euro currency. So now can you just imagine what can a euro currency deposit mean? What can a euro currency deposit mean? It is nothing but euro currency deposit is any other currency, dollar or any other convertible currency deposited in a bank outside its origin country. So take for example, our country's currency is the rupee. So wherever you make deposits in our country, any bank for the sense, you can make deposits in rupee. So if you ask anybody how much do you have in your bank account, he will say in lakhs, this much rupees, lakhs of amount, 1 lakh rupees or 2 lakh rupees. So all the denomination will be in rupees. But see, the same rupee deposit, you just imagine in London or in Kuwait. Instead of that, they should have a account in real or whatever the country's currency they have, isn't it? So instead of having currency, that particular Kuwait country's currency, dollar or real or whatever it be, there, instead of that, if they have a rupee account in Kuwait, then that we call as the euro currency deposit. Or in corollary, we can go by this way. Say in our country, we have deposits only in rupee. But in our country itself, we have an account, savings bank account or whatever account, current account or whatever it be. If you have a current account in dollar or any other currency, any other country's currency, then that particular deposit is called as the euro currency deposit. That means a deposit which is not in our currency, which is not in the domestic currency. That is what we call as the euro currency deposit. So a euro currency deposit is a dollar or other convertible currency deposited in a bank outside its country of origin. So how this practice came? Why do we call that as euro currency? See, it can be called as international currency or other currency or foreign currency. Why do we call euro currency? Is just a very simple thing, because it first started in Europe. This practice of having different currency deposit started in Europe. What happened in Europe is, as I told you earlier, instead of having rupee account in our country, if you have a dollar account or if you have a yen account or franc account, then that is called as euro currency deposit, I told you. Like that, this first happened in Europe. In Europe, what happened is people started to deposit money in dollars, in American dollars. So when European bank, they accepted deposits in American dollar, that was called as euro currency. Because Europe didn't have deposits in their currency, but they had in American currency. That is why it was called as euro dollar or euro currency deposit. Because the origin of such a practice started in Europe, till now we call that as euro currency deposits. Such deposits are called as euro currency deposits. Instead, we can call that as foreign currency deposits also, but it is termed as euro currency deposits. So let us have a small break and we will continue in the next class to make it uploading very easy.